do. The one thing is that happens a lot is don't throw away or shred your pay stubs or bank statements. There are a lot of customers that will not have pay stubs. We have to wait 2 weeks so they get paid next time. No one take it personal if you did this.
Or if your children have to do it.
I don't have pay stubs again.
Yeah.
I don't have pay stubs.
Right. That's one thing. Don't, a lot of new home buyers, first-time home buyers, will get excited about buying a house and they'll go out and buy a $3,000 TV at Best Buy. So they open up a new credit card, new debt in the middle of the process, and their debt-to-income ratio is really tight. And now that they have a new TV payment, it can throw things out of whack. That happens, not frequently, but sometimes. Or furniture, appliances. Wait till you close on the loan. That's what we tell people when we don't forget to remind them of that. And don't quit your job. That's I mean, you've had it happen.
Don't deposit cash. Don't make large, unusual deposits or red flags. Underwriters are detectives. They're looking, their job, what they get paid on is to find things wrong with the file. That's what they do. And so our job is to present them clean, concise information. And so when we have things like large deposits that are cash, it can throw it all off. So, and then customers don't understand, why does it matter if I made $500 a yard sale? It doesn't, but I can't verify it. And, that's great, but just little things.
Yeah. If you're getting money for down payment, for family members, it needs to be documentable, not in a shoebox at their house, under the bed, or mattress.
It happens all the time. We have conversations all the time.
Yeah. It needs to be in the bank for 60 days if it's your own money, and 30 days for gift money. One other thing that a lot of people do is they tend to, they think closing a credit card account, even with the zero balance, will help their credit. And actually it's the opposite, especially if it's a zero balance or there's a lot of room, like a $1,000 credit limit and they owe $50 on it. Closing that account means less available unused credit and the scores drop. And it can be substantial, at least for the short term. Now, if you have 10 credit cards and they're all paid off, closing one or two is not going to necessarily make a big difference, but it could make a difference in the score a little bit in the short term and change what rate you get or if you qualify. Because the worst is if you have one or two credit cards and you close both of them and you have no available credit that's not used. That seems to be something that's a myth or a misunderstanding that a lot of people don't realize that can really hurt you.
Or paying off the gold collection, can hurt you with your score-wise. So it's good to ask first.
Yeah, paying off a collection that hasn't reported for 3 or 4 years, it's not a judgment that you're not getting phone calls about, can actually really hurt your score for a short time because it's new activity on an old derogatory. And you may have heard me say this if I talk to you about it. Because I tell everybody that has any kind of collections, just wait, let's see if
The
they...
sleeping dog lie.
Well, yeah, that too. But the underwriter will tell us if we need to pay something off. And, you take a 4-year-old collection and now it has brand new activity this month. It is a major driver on your score.